Welcome to another episode of the Mortgage Pro podcast. Today we have an interview with the Managing Director of HLP Partnership, which is one of the mortgage networks. It shows how small this industry is because I've actually known Sean for nigh on 10, 11 years when I first went sort of self-employed and stepped into the protection-only market when Sean was at Legal & General. Good morning, Sean. How you doing?
Very well, thank you. How are you?
Yeah, good. Can't complain, apart from being stuck at home all the time, as we all are at the moment. That's a nice picture you got behind you. What's that from?
Well, I'm in my dining room because what happened was I've got an office upstairs, but when my youngest son moved back in for the duration, I thought he wouldn't want to listen to the Xbox and things like that if he was playing Call of Duty or scoring a goal at FIFA. So it's a Jack Vetriani that's in the wall in our dining room.
Very nice indeed. That's funny you say that actually, because I was talking to a couple of our friends. We're doing the whole Zoom friend conversations and all of that, and it's like, hang on a minute. I didn't have children, especially 3 of them, to be looking after them 24/7.
Yeah.
That wasn't the deal that we signed up for. And you're probably thinking the same. It's like, hang on a minute, he's 24. He shouldn't be at home right now.
Yeah, definitely. But yeah,
Leave
it at that, definitely.
Obviously, I've known you for 10 or 11 years. What was kind of the first job that you had, Sean?
So the first job I had when I left school, I joined the civil service. So long before you were probably born, 1982, I joined the civil service.
I was 1.
All right. So I joined the civil service back in those days, and it was I was called a clerical assistant. Worked in the post room in the employment division in Sheffield, 11 floors, lots of things. I found out that ladies swore. I never realised that, being a young lad at 16. Couldn't believe it. And yeah, great times, interesting times. Stayed there for a number of years, and then left there to join Legal & General in 1985.
Okay, so you've been in the industry then realistically since 1985?
Correct, yeah.
And what would you say been the biggest change from when you joined it in 85 to now? Apart from compliance and paperwork.
Yeah, it's impossible to say really, because I think since 85, we'd gone, I can't say because I wasn't in the industry before 85, but before that, I think it was just went along at a steady old pace, not a lot of difference. When I joined in 85, there was no such things as appointed reps or anything like that. You were basically just a broker.
Yeah.
And then things moved, and IFAs didn't really exist. You were just a broker. IFAs then started to exist. The first thing I remember was CAMIFA, Campaign for Independent Financial Advice, when appointed reps started, because people didn't like appointed reps sold time. And it just went from there. And as you rightly mentioned, compliance became something. Compliance became more important than business, which was, so just different. No exams, nothing like that. Brokers used to walk in, having been policemen one day, go on a course for a week, and the following day they were a financial advisor or they were a window cleaner. And used to see all the people attend the direct sales courses next door to us, and just a different world, to be honest. Just a completely and utterly different world.
Yeah, so talk us through. So 1985 at L&G, and I met you around about sort of 2010 times. That's at least 25 years you had there. So talk us through life for Sean underneath the L&G umbrella.
So do a potted history. Started at L&G in 1985. My first job was opening the post, obviously, as a young lad in there. And I then became a life inspector. Those things don't exist anymore. But life inspectors, I was looking after the building societies. So all the building societies, your Halifaxes, your Leeds Permanents, your Leeds and Holbeck, all these sort of people. I used to go around and I used to say to them, please use us when you do your mortgages. And at the very start, I actually did something called green forms, which some of your older members will remember, but not some of your younger ones. So green form was the application for a mortgage was done. We used to get a green form, and then we basically went out and saw the client and signed up the endowment. Simple as that. So we started to do that. Then the building societies and the bank started to do it themselves. And then that was it. And then from there, I moved on to become an account manager, broker consultant, senior account manager, etc., etc. Yeah, so in 1991, 92, L&G joined the appointed rep market and we split, and I ended up in the appointed rep side. So I was there when L&G started the appointed rep journey, and that journey just continued. I had different roles in there. Sheffield office closed, we moved to Leeds office closed, we moved to Manchester, and so forth and so on. And I became, my last job in there was national sales manager. So I got that role in 2000 and, blimey, time flies, 2013. That would be about right, after doing loads of different roles. At that stage, we were all classed as home based, working out of Kingswood. And we knew when we got that job, it was probably coming to an end for L&G with the appointed reps. They wanted to get out of that market, which was their prerogative, obviously. I was there at the beginning of the appointed rep division. I was there at the last day when it closed on the 31st of May, 2016. And that was my last day at Legal & General. So yeah, long journey.
Crazy. And so you originally joined it in post, and when did you kind of transition from, because Legal & General didn't do mortgages until what year did you say?
I can't tell you when they did. Well, they didn't do, never did mortgages as such, did they? As the appointed rep division, that came in about 1991, 92, something like that.
They quite a long time then.
Yeah, but the mortgage club, that's been going 25, 20 odd years, and that's when they really got into it there. But originally it was just for people doing insurance.
Yeah. So did you spend any time just on the insurance side and then transition over to the mortgage, or how did that work?
I was never involved actually in the mortgage club, never worked in the mortgage club, but as part of the appointed rep division, the mortgage club was part of that division.
Gotcha. Yeah. And did you do any of the protection only side or anything like that? Or have you always done the mortgage side?
No, in L&G, everything I did was protection. That was my thing, was life and GI. So I am a life man. That's what I am, or a GI man, but really a life man. Life's my passion.
Yeah. Okay, cool. So that took you through to, so you were on the life side of the AR part of Legal & General.
Correct. Yeah.
Got you. Okay. Yeah, I didn't know that actually. Well, it makes sense actually, because I was doing life insurance only back in 2009 sort of 2011 time through till 2015. So that's where we obviously had the connection there. Okay. And what would you say the biggest things have changed in life insurance, going from Legal & General to now kind of managing director of HLP, and looking at the differences between life insurance in the early days and then life insurance now?
I suppose the biggest difference was when I started out in the industry in 1985, it was two things. There was an endowment mortgage, which you will probably not remember, but there were endowment mortgages, and there were capital and interest mortgages.
Yeah.
And I'll always remember that with the capital and interest mortgage, the interest rates at that stage were about 15%, believe it or not. And a capital and interest mortgage was actually dearer than an endowment mortgage. So at that stage, if you can imagine, you went to see people and you said you can have this sort of mortgage, and with this sort of mortgage you pay your interest to your building society, your bank, and then you pay this amount to your insurance company for your endowment. At the end of 25 years, your endowment will pay off your mortgage, and you might have a bit of money left over. And that's going to be, whatever it was, £137 a month in total for everything. That's your mortgage and your insurance. And your capital and interest mortgage, that'll just pay off your mortgage as you get to the end of 25 years. And if you die, your mortgage will get paid off. And that's £140 a month. Which one do you fancy? And you can imagine, everybody took the endowment mortgages.
Yeah.
And I think that's the biggest change, that now, again, being a life man, it's just, we don't sell enough protection. There's no doubt about that. As an industry, we just don't sell enough protection. It's as simple and straightforward as that.
We've got an email going out to the Active database actually about the amount of protection that's dipped over sort of the last 5 years. Having looked at the research, it's, there's less people covered now than there was 5 years ago.
Yeah.
It's crazy that the gap's getting bigger essentially, isn't it?
Yeah. The thing I'd always say is, I used to do loads of training at L&G, and obviously now in my role I still do some of that as well. But the simplest way to look at this for me is you have a young couple, because that's the typical house buying people. Young couple, 2 children, without being sort of like stereotypical, and you've got those people. So you've got 2 adults and 2 children. You do the mortgage, and do you try hard enough to get the protection? I can't answer that question. But 6 months later, once you've done everything, you're walking down the street. On the other side of the street is that guy with the 2 children. And you know that lady has died. So the question is, do you walk over knowing you've done everything you could have done, and you say, I'm really sorry to hear about your news, whether you sold protection or not, you did everything you could, you tried? Or do you stay on the side of the street you're on and think, God, I hope he doesn't see me. I just feel embarrassed. And that's the test for me with protection. And that's the test when you're a mortgage advisor.
Yeah, can you hold your head high enough to know that you've done all you can essentially do? I think one of the big things that I know from training trainees lately over the last couple of years. You know, people are very new into the industry. There's so much to learn now on the mortgage side of things, and the processes and the different lenders, and particularly if you get into the buy-to-lets and the calculations and all the sexy different property strategies that a lot of people are doing, that they to then throw the protection side in as a knowledge area, learning about, you know, LTA, DTA, FIB, income protection, all the different angles. It's almost like the reason why I think it's such a advisors struggle at the beginning is because they're trying to put so much effort into learning mortgages that they almost get into the habit of not talking about protection, that it just becomes that secondary fiddle, where actually they need to take more time at the beginning which is really hard to learn both at the same time. Do you think it's possible to be an expert in both, or do you think that you really should be partnering with people, mortgage expert, protection expert?
Personally, I don't think there's a right answer. I think the answers are very much basically what you're going to do is you're going to either sell mortgages or you're going to sell protection or you're going to sell both. That is up to you. There is no right answer. So let's get on that. Where I am, I slightly disagree with you. I think if you just go back in time to 2007 and 2008, when the financial crash happened, what did we see happen with protection? It grew. In these periods now, what's happening with protection? It's growing. So the answer is, I don't think it's a knowledge issue. I think it's a time issue. And when people have got time, they spend the time talking to people. Previously what would happen is I'd have outside my door one customer and I'd have a customer inside. So I'd do the mortgage and then I know I've got another customer, so I'm pressed for time. So I don't have the time because I've got somebody else outside. If I didn't have that person sat outside, I'd do the protection. I think the biggest issue is not always knowledge. I think it's the time, and it's about making the time to do it right.
Completely agree with that. And one of the biggest learnings that I've had from business coaches and stuff over the last couple of years, which I now teach inside the academy, is all about understanding capacity. And it's more often than not, what affects capacity is that one person can only do one thing. For simple terms, you know, a personal trainer has only got 8 hours or 10 hours in a day that they can see because they can only service one client every hour. Plus they want some time for themselves. You know, that's their capacity in a simple format. And a mortgage advisor is the same. They've only got a certain amount of time to do lead generation, to do fact finding, to do applications, to do submissions, post-sale admin, etc. And in understanding capacity, you can say, right, that's how much I can physically do and earn. You know, I can't earn more than, for argument's sake, 60 grand on my own doing everything. And that's at the point where I need to bring in an admin. And that's at the point when I need to bring in an advisor. And as soon as you understand what your capacity is and how people can increase that capacity, it makes it easier to then do a proper job and do everything together.
Yeah, you're better off in some ways seeing less customers than seeing lots of customers. Because if you see the less customers, you can do the acid test, would you cross the road, and you know you've done everything you can.
Yeah.
So it's difficult. It's not. There's no such thing as the right answer. It's about fitting your business model and things like that.
Yeah, no, I'm totally with you though. I think it's slightly unethical to not cover clients and talk about it. And I would rather do, you know, less mortgages and more full cases effectively. Yeah. What did we? Fully protected mortgage was the
fully protected mortgage. Fully protected mortgage, yeah, that's the one.
That's it. So obviously you left Legal and General, and what kind of happened to you after the Legal and General days?
So in 2016, it was didn't have to be a genius to work out that we were closing the appointed rep division. I was one of the people involved in closing it, so there wasn't really going to be a job there. So during the late end of 2015, early 2016, started to look around and saw a few things. Took an opportunity to sort of like see what was out there, having never really looked before. And one of the networks I was involved with is a network called Mortgage Support Network. And before I became involved with them, I'd never heard of Mortgage Support Network. Very small network based in Leicester. Got roughly at that time about 70 ARs and about 78 advisors. So it tells you it was a lot of one-man bands. And the managing director at that time was a gentleman called Peter Ransom. And Peter was coming up into his mid-60s. I think he was 63, 64, looking to retire. And the two people who owned the network had said, look, just find yourself a successor. He wanted to go in about August. I was looking to find something from May onwards, and we just chatted and basically went from there. And I joined Mortgage Support Network on the 1st of August 2016, which was great. Peter decided he was going to stay on for a few more months, which was fine, and was going to go on the 31st of December to do a proper handover. During that time, though, in November 2016, an offer came in for Mortgage Support Network from HLP. So that was a bit like, if you like your football, as Alex Ferguson would say, squeaky bum time, because like just started a new job, and then it was going to be different owners. So they came in 2016, and that was completed in July 2017. So that's when it became part of the HLP group. So yeah, interesting.
Yeah, and what was it like, obviously, after such a long period of time with, you know, an industry leader in the insurance world, closing their AR division and then having to kind of think, you know, obviously you had severance package and all that, I can imagine, but finding a new job and finding a new home and sort of is almost like coming to the end of a marriage in some respects, isn't it? What was that kind of like?
Yeah, I did 31 years. So I think the thing that made it easy, and if it can be easy, is that we actually closed it down. I don't know if that's possible to say it made it easy, but it made it easy in the fact that everybody else was going. Does that make, I don't, it's hard to explain, but because everybody else was going, like my best friend, he worked there and I'm still in touch with him now, going on holiday with him, and we both finished on the same day. There's some of the people who were friends who I'd known for so long, we all finished. So we'd all finished together and we all had to do different things. It's not like I look back and think, they're still there. They're still doing this. So I think that made it so much more easy. And because I had time, because we knew we were going to close it, I had a look round. There was 4 or 5 things I was looking to do, and I ended up choosing the Mortgage Support. So I was pretty cool with it, which is quite surprising after so long. But because it had a definite ending, it felt like a bit like we shut the factory door, put a chain and a padlock on it, and it was all done. So that's how it sort of felt. So yeah, it was good.
And having done protection only with Legal & General's AR network for such a long period of time, were you looking to still just continue on that new role in protection only, or move into more?
No, not at all. Well? Because of over the last, I'm trying to think of the time scale, over the last 4 or 5 years, as the L&G network got smaller, the involvement with the mortgage side got bigger. And so I had met the people at the Abbey Nationals, the Halifaxes, the Leeds and all that. I'd been meeting those at regular events and things. So I knew a lot of the people anyway at the time. So no, it was always going to be that mortgages, whether we like it or not, mortgages drives this industry, not protection.
So, yeah, which is wrong in some respects, isn't it? Because everybody needs protection, but nobody wants it. And it's a buy now product where a mortgage is always dictated to by the next renewal date or kids' school holidays or, you know, when they're going to the next term or whatever it might well be. But hey ho. So you then got purchased out by HLP.
That's correct, yeah.
And then what kind of happened after that?
So HLP came on board in July 2017, or we came on board with HLP in July 2017. And for the remainder of 2017, we ran as 2 separate networks. So I ran MSN, and the HLP directors ran HLP. During 2018, we started to come together. We started to do joint events, HLP and MSN events. So we started to do those. And then towards the end of 2018, more of the MSN people realised, when I say the MSN people, I mean the ARs, the advisors, that we were probably going to end up as all HLP. Everybody seemed to accept it. There wasn't too much change or anything like that. And in 2018, I can't tell you the exact month, but September, October, I became the MD of HLP as well. And we just became one network. We still got one AR at this moment in time who's under MSN, and we're doing the transition. But we're just HLP now. So the MSN website, everything's gone. Everybody's transferred over, and it's been good. It's been good.
Nice. And how many brokers have you got now?
So we've got at the 31st of March, we had 334 ARs and 671 advisors.
So you're about 1,000 all in.
No, 671 advisors work within the 334 ARs.
Got you. Yeah. Okay. Yes, there's no RIs effectively, no registered individuals or anything like that. They're 671 are part of the 334.
That's correct, yeah. Some of those are one-man bands, some are two-man bands. We've got some who've got 20 plus. So we've got a wide variety, really.
Gotcha. And what's it like running a network?
Great.
That's the one-word answer.
Yes,
what's
fantastic.
a day in the life of Sean like then? That's a better question. Not at the moment in normal kind of pre-corona environment.
I'd say, well, going back to your first question, what's it like running a network, being involved? It's great we don't, nobody likes everybody. We know that, don't we? That's just like how human nature is and things like that. But on average, mortgage brokers, protection advisors, whatever you want to call it, people in our industry are really friendly, gregarious, really nice people. So over the years I've been in the industry, I've met some fantastic people, got some good friends, but they are genuinely nice people, because to do this role, you have to be friendly, you have to be personable. And yeah, so from that point of view, it's great being involved in a network at any level, and it's the people you meet are really good people on average. So yeah, that's good. With regards to a day in a life, I can't remember what a day in the life's like, because things have just changed so much, haven't they? But for HLP, the few things I do, one of the things, I run the recruitment team. So we've got 3 recruitment managers, one gentleman who actually just recruits advisors for the ARs, and we've got 2 recruitment managers who recruit ARs. So I run those, so obviously speaking to those on a regular basis, have regular one-to-ones with those guys. I also run the telephone BDMs. So we have 2 telephone BDMs whose role primarily, again, due to my background, is to drive protection. And if you remember Pinocchio with old Jiminy Cricket, they are the Jiminy Cricket on the shoulder, sort of saying, have you sold protection? Why haven't you sold protection? Do you need a bit of help selling protection? Etc., etc. So I get involved with them. So I speak to them on a regular basis, obviously. The other thing I'm involved with at HLP and run is the technology. So we use a system called 360, which is our CRM. We also use 27 Tech for the sourcing. Obviously, you spoke to James yesterday, and we use iPipeline. So we have Sajid, who runs that department, and we speak to him on a very, very regular basis. So they're the sort of the main areas of concern. We also have a later life, because one of the things we're keen on is later life, and some networks get involved in it, some don't, but we really favour later life. I think it's a good thing, and we have a lady who runs the later life department for her, and I run that as well. So
that's equity release and later life lending, right? Yeah, so you are doing the equity release side. Yeah. Do you do wills as well underneath the banner?
Not underneath HLP, but we have a separate company, yeah. But we don't. It's not part of our remit, but we do have that, yeah. Okay.
So that's essentially. So how many people are you kind of managing within your MD role? Then would you say?
So managing within the role. So I've got 3, 4, 5, 6, 7, 8 people. That's it. So that's enough, really, if I'm honest.
Yeah. And is that kind of the whole of HLP that then?
No, we've got 70 staff in total.
Right. Okay.
So we've got 70 staff, some home-based. We've got 2 offices, one in Leicester, which is a challenge at the moment, because the office in Leicester, we were due to move, which we have now moved, but we haven't got broadband still. So that's been quite a challenge due to the COVID situation. Yeah. So yeah, so nobody's working from the office. Everybody's working from home, dialing into the desktops and things like that. So it's not the challenge it would have been, but I suppose without COVID, we'd have been able to open the office anyway. So yes, we've got an office in Leicester where people are based out of there, and we've got an office in Chichester. So we've got 2 sites, and then we have a series of people like the regional compliance managers, people like myself who are classed as home-based.
Yeah.
So yeah.
Gotcha. And that's, I suppose, what the 70 people are then made up of, aren't they? It's file checking, it's compliance, it's all
marketing,
the other angles,
commissions, yeah.
Yeah, administration, recording, yeah.
Everything, yeah.
Yeah, so one of the things that I see a lot with networks is, or have seen with some networks, is the main thing that they're kind of interested in is the compliance aspect. And often that can stop advisors, you know, they're compliance led in some respects rather than sort of being sales led. How do you kind of balance that part of it?
Right. I think the first thing to say is you can't avoid compliance, can you?
Of course not. No, I don't mean avoiding it, but some of them put so many restrictions in place. I remember PTFS, for example, back when I first went self-employed. It was just like, I'm trying to make money. I know I've got to be compliant, but there's got to be some leeway somewhere.
Yeah. I don't think there's a right answer to give on this, if I'm honest, because where you are, we follow the FCA, we have rules, we have guidance and all that. And at the end of the day, you join a network for two reasons, regardless what anybody says. You join for two reasons. One is to make sure you get paid, because that's really important, obviously, and the network coordinates all the money coming from the providers, the lenders, etc., and sorts all that out. And the number two is to be kept safe. That is why you join a network. That's what a network does for you. Everything else on top of that is the icing on the cake. But to be kept safe is the number one reason. With us, yes, I worked at Legal & General. If there was a line, then L&G were well above that line, because obviously L&G had a brand and still got a brand and are very proud of that brand like they should be. HLP, we're proud of our brand. We've got a good brand. We have a line, but that line is where we believe it should be. We don't have any issues. We don't have any complaints. And we have a compliance director in Gavin Earnshaw, which, if you like your football, I consider him to be firm but fair. That's how he is. That's how he is. And you can talk to him and he's approachable. And I think the biggest thing that we are as a network is we are approachable. We are friendly. We are the sort of people you can pick up the phone to and talk at any time. And I think that's part of, in answer to your question, that's where we are. If you ring up and say, look, you want in this, you want in that, Gavin, me, or somebody else in the network can explain why. So it's not just that that's how it is, it's explaining why. So the culture of our network is the most important thing. And if you were to speak to any of the members, they would tell you that the culture is so, so important. And to me, the happy advisor and a happy AR is what this is all about. Sometimes we'll have to deliver messages that they don't like. But the idea is we've got to keep every single one of those 671 people safe. And sometimes that means making difficult decisions on a few people. But that's the overall motto. Keep people happy. If they're happy, they'll stay with you. But the culture, you can ring us, you can talk to us at any occasion. And just to echo that, what I tend to do, I do the introduction to all the induction courses, and I always put my telephone number, my email address, and say you can ring me at any time. And every event that we do, I always speak at the events. And again, I put my telephone number, email address up at the end, and they can ring me. We are very, very approachable. We're not just saying that. Anybody can ring, and we will. I haven't got all the answers, by the way, but what I guarantee is if I haven't got the answer, I'll get somebody who has got the answer to get in touch and sort it. And that's where it is. We're not living in an ivory tower.
Yeah, that's the mortgage advisor motto, that one, isn't it, to clients? If I don't know, then I know somebody who does. Yeah. But I've definitely had that feedback from, Thomas Honor's obviously been on the podcast and put us back in touch again. And we've got other people in the academy and who I know who are part of HLP, and they only ever sing your praises.
That's good. Thank you.
It's good from that perspective. And yeah, culture, I think, in any business is really, really important, without a shadow of a doubt.
Yeah.
To keep everybody singing from the same hymn sheet, and you want the right ARs working with you as much as somebody else. So, what would you say for anyone listening? What kind of what is an ideal HLP advisor, apart from one that's compliant?
There's an ideal. I don't know if there's such a thing as an ideal. I think what I'd say is, let's just say what we're after. We don't care if you're a one-man band, two-man band, or a firm with 20 plus advisors. We treat everybody the same, and lots of networks would tolerate smaller ARs. We don't tolerate them. We genuinely want them, we like them, we support them. So as long as you're doing a good job and you're writing, obviously, we don't want people who are we don't want part-timers. That's the one thing we're not interested in. So we want people who are full-time, doing a good job, looking after their clients. Then they are very, very welcome to join us. And I guarantee they'd be very happy. Certainly the smaller one-man bands, two-man bands, they really like us because we are so approachable and so friendly. So we do really well with them. And one of the things I always say is when we're talking to people who are out there looking, don't look how much it's going to cost, because really every network will charge you roughly the same. They all take the same slice of pizza, they just cut it in different ways. So don't make any choice on cost. Make it on how you feel, the approachability, the compatibility to you as an individual. And that's where we score highly, because in this current, I know we didn't want to mention the crisis, but in these current times, we're out there every day, putting bulletins out, speaking to people, and that's so important at this time. And it is at all times.
Yeah, without a doubt. Definitely, definitely. It is one of those things. I see it all the time. People comment in my, the Mortgage Pro community, and are like, "Oh, which network pays the best?" And it's like, but that's not the way you want to look
It's
at it.
not, no.
It's about how they're going to support you, whether you're a right fit for them, whether they're a right fit for you. Some networks will give you massive marketing support. Some won't let you have your own brand. Some won't let you will. There's so many different pieces to the puzzle. You need to find the puzzle that fits the business that you want to build. As you say, if you just want to be a one-person army with a couple of administrators, then you would be a great fit for them, where I know a couple of others wouldn't, because they only want people who just want to build a monster and that's it.
Yeah, and I think our uniqueness is that we like both.
Yeah,
we like both. We treat both the same. We're very friendly, open to whatever. If you're a one-man band and you want to ring me or ring one of the directors and discuss something, please do. If you're a 20-man band and you want to ring, please do.
Yeah.
And we treat everybody hopefully with respect. So yeah.
And how many events do you run each year?
Do you want this year?
On an average.
So what we tend to do, we have a number of events. We do later life events.
Yeah.
So we've already held 3 of those. When we do the same event 3 times. So we did that because it's later life in Leeds, Leicester and London. And then we would have done them again in September. We may still do them, we'll have to see. We then do protection workshops at 6 events across the whole country. We do those twice a year. We do specialist lending events, again, 6 venues across the country, twice a year. We do a business development forum at 8 events. And again, they're twice a year. We just started to hold those in March, when it obviously changed a little bit. And at those events, we have the protection people, the lenders, we have the second charge people, we have the conveyancing firm, so they're like quite big events. We then also, on top of that, we had an annual conference this year, which was our first one ever, which was fantastic. We had that at Haythrop Park, 200 odd people there. So that was a really success for us. So we do that. I'm trying to think what else we do. Marketing events and tech workshops as well. Nice. So, but obviously they're all planned out before the year starts. All the dates are in. We've held quite a few up until whatever it was, the 16th, 17th of March. And then the world's changed.
Yes.
So, yeah.
I know, which makes it difficult in relation to kind of the next question of, where's HLP going next? It's is there kind of any plans at the present time? And have you got aspirations of numbers of advisors or ARs or anything like that?
Yeah, I mean, where we want to be, we started off the year about 650 and we're now at 671. We are still recruiting, believe it or not, in this time. Not so much recruiting advisors to join existing ARs, but getting other ARs to join us, or one and 2 man bands who are with, I wouldn't say the names, but some of the estate agency chains out there and other people who are thinking, now might be a good time to make a decision on my future. Because usually when you're thinking of joining a network, the 2 things that stop you is I haven't got the time to make the decision and it'll ruin my pipeline. Well, both of those at the moment, you've got plenty of time and your pipeline's probably going to be impacted anyway at this moment in time. So we are still looking to recruit. What we wanted to do, I don't think there's I want to be at X, whether that's 1,000, whether that's 800, or I don't think there's a number we want to be at. We want to grow in a positive way with the right sort of people. That's what's really important to us. With regards to lending, we want to get the people who are actually doing with us to write more business, and we want to help them develop to do that. And that's writing more. Our big mantra this year, our big strapline was get protection done. Like Boris had done, get Brexit done. Our big thing was get protection done, because we want to do that to increase the profitability and also doing the job right. So that's a big thing for us. So I can't say we want to be at 1,000 advisors. Would we take costs? We'd love to have 1,000 advisors, but we'd rather have 700 really good advisors than just have 1,000 for the sake of it. So we want to grow with the right people in the right way, and we're not on a trajectory to get there at any sort of time, just growing the right way.
Yeah, without doubt. And it's definitely a case, leaving protection. If you're leaving protection on the table, then you're missing out on 50, 60% of your income. It's an absolute no-brainer, apart from, as you say, doing the right thing by your client. It's a huge income generator.
The one thing I would say is, you're right about the money, but you should sell protection because it's the right thing to do.
Yeah,
not because of the money. The money is a byproduct of doing the right thing.
Yeah. It's Yeah, totally agree with that without a shadow of a doubt. Obviously, I did protection only for 7 years.
Yeah.
And I have to say the clawback was, I know a lot of people have fear kind of clawback. The clawback was high because it was all internet generated leads. But as soon as we started getting back to mortgages in 2016, I think we've had 2 clawbacks out of hundreds of mortgages that we've arranged.
Yeah.
And yeah, it's if you do a decent job and you talk to the clients about it and you make a good recommendation, then you don't get as many clawbacks as you potentially think.
The other thing as well, obviously you mentioned clawback, is just sell non-indemnity.
Yeah.
Whenever we do any recruitment, and not just now, and I was at Legal and General as well, we used to recruit people. I always used to say to them at the recruitment meeting, if I was you, starting today, I would go on a non-indemnity. I guarantee you won't, but in a year's time, you'll meet me again and say, I wish I'd have listened to you.
Mm. Yeah, so, see, I essentially, if I'm coaching a business and working with them to build, I get them to put a premium limit in. So
right, yeah.
up to a certain amount is indemnity, because you want the cash flow when you're kicking off. But once you go over, if you do a £150 premium for argument's sake, you take it on the drip on non-indemnity, and then as that residual starts to build, you'll then be able to go, right, £100, £90, £80, £70. So it's more of a, once you start seeing that you've got £3,000 coming in every month residual, you feel less stressed with actually going all out all indemnity from day one. And that's what I've done with my advisors, and it works really, really well there. You know, they want the injection straight away because they're.
And I get that as well, yeah.
Yeah, but it's just helping them to understand that model as well works really, really well. So where do you think the industry is going then, Sean, as of, you know, the end of Corona or in 2021 and far beyond? What do you think is going to change in the mortgage world as the MD of HLP?
Well, I suppose the most important thing with it, obviously, is to get through this period, isn't it? We all know that. And I think anybody who makes any predictions at the moment is a brave man, shall we say. Realistically, we need to get people back to work as quickly as we can. The quicker we can get out of this, the people who've been furloughed, the majority of them will get back to work, and hopefully all of them will. The longer this goes on, that likelihood is that some of those people who've been furloughed won't get back to work. And we all know we are a very, very important part of the whole economy for this country, because if you buy a new house, whether it's a brand new build or a new house to you as individuals, the first thing you'll probably do is buy a carpet. You'll buy some new curtains, you'll buy whatever. So it'll get the economy going. But if there are less people working, then that's going to take a bit longer. So I can only tell you where we want to be. I can't tell you where the industry is going to be, because I think we're all a bit, let's see. I think where we're going to be where we are now, hopefully in a good position, creating a good network for people to join to grow their individual business. With regards to the industry as a whole, are we at the cusp of a big change with regards to APIs and things like that, and mortgage apply and all that? I don't really know, if I'm honest. I know you said you had James on yesterday, but there's been lots of talks about this is going to be the cutting edge of the industry. We're going to be doing this, we're going to be doing that, and we're going to be able to apply with X lender, B lender online. But we're not quite there yet, are we? And once we get there, will that change things significantly? Yeah, I think it will. But technology is a big part of the future, and getting technology to enable people to do a fully protected mortgage, everything's simpler and easier. I think that's a big part of the future. But I think to make predictions on what the industry is going to look like at the moment is, yeah, you're a brave man, because we just don't know what it's going to look like in a few months, do we? We're all hoping we'll be out of this really quickly, but we just genuinely don't know. We just hope we will be, and I'm sure common sense says we will.
Yeah. I think the big thing we're seeing at the moment, or what I'm seeing in my brokerage and speaking to other people as well, is very much a case of a lot of remortgage business, a lot of protection business, a lot of product transfers, opportunity to add an arm. So I've just brought out Active Wills. We're launching Active Commercial because we've got a commercial advisor sort of coming on, and we do a lot in that space within my own brokerage, but also because we do a lot in the property purchase sector and property investment sector. There's going to be that springboard. There's going to be a slingshot at the end of this when it eventually does end, and it hopefully will.
It will end.
There's going to be a point where everything's going to go hell for leather, because there's people who still want to sell houses who can't, and there's people who still want to move and buy, and there's almost a bit of a bottleneck being created for purchases. So hopefully, you know, it's as you say, we don't know what impact the full furloughing and things like that is going to have at the moment. But there should be a good bounce back in the property market at least, which is why my message to every advisor is double down on your marketing now. You might feel like you're doing, you're putting in not a great deal of effort, but if you want to build pipeline and relationships for future business, now's the time to be doing that, because when it does slingshot back, if you've spoken to X number of people consistently over that period of time, you're not making the money now, but you're going to have a nice bit of, chunk to be going back to when this all returns.
Yeah. I mean, as you said, what you've just said mirrors our market at the moment. Product transfers, remortgages and protection. They're definitely the three main things at this moment in time for obvious reasons. And if you've been in the industry a while and you've got a good sized client bank, you've got a lot of opportunities over the next few weeks and months. Definitely. I appreciate, like you said, if you're relatively new to the industry, you haven't got a big client bank, then you've got to do as much marketing as you can to get your name out there for when this does start to get going. So it's certainly interesting times.
Definitely, not like any I've ever faced.
Yeah, for all of us, yeah.
Well, thank you very much indeed, Sean. It's been good catching up and hearing your insights and your journey and where you think it's going, although it's difficult times to make any predictions, as you say. If obviously anybody wants to contact you, how best would you advise them to do that?
By my mobile telephone number or my email address. You want me to give those out?
Which do you want? I'll give the email address on the podcast, to be fair. You never know who's going to take advantage. It could end up anywhere.
Yeah, so my email is Sean, SHAUN, @hlpartnership.co.uk.
Perfect. And obviously they can Google HL Partnership as well.
Of course they can,
the phone numbers there and all of that sort of stuff if they need to. Are you guys on any social media channels or anything like that?
Yeah, we're on LinkedIn, as you'd imagine, and we obviously got our own website as well and everything. So yeah, so LinkedIn's our big thing.
Perfect. Thank you very much indeed, Sean. And I always like to end the podcast. I called this whole element the Mortgage Pro podcast because perseverance leads to results, which creates opportunity. What does pro mean to you?
Yeah, so to me, it's quite simple. From a young man, I always wanted to be a pro, and a pro was a professional footballer. So to me, a pro has always been somebody who is a professional, the elite, the best. So for me, that's what pro means.
Perfect. Thanks very much indeed, my friend. Good to speak to you.
Thank you.